Hello, 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 hello. Welcome to Slay Your Day podcast with April Rogers and the Contract Slayer. This is our first episode. We are going to, first of all, we're live. Hello, Facebook, everybody that's there. I can't see y'all because it's not facing me. So hello to whoever may be there. And that's, hey, Ron,
honey bunny.
Right? No surprise that you're the first one on the live,
The
Ron.
support is there. Hubby supports.
Right. So welcome to Slay Your Day. This is a podcast where we focus on improving your life and your day by focusing on and featuring small businesses and people who are able to bring unique perspectives to help you with your day-to-day life. And today we are featuring Glenda Walker. She is here from RMSI, and tell us a little bit more about what that means.
Okay.
Because we're saying RMSI, but that name is very intentional.
It's very intentional. So RMSI is Relationship Management Solutions, Inc. So I come from a background of banking where relationships matter. So if you're banking with a bank, if you're doing business with someone, relationships matter. So I decided to name my business after the key thing to doing business, which is developing relationships. I have a huge management background, and I'm here to provide solutions.
Now, you say you have a background in banking. That is underselling what she does and what she did. Let's talk about it for real. She don't just have a background in banking. She was the banker.
Yeah.
So let's talk about that.
Yeah.
What did you do? You don't have to name the company, but we're going to just say that it wasn't no little small bank. No disrespect to the small banks, but it was not a small bank. What did you do at the big bank?
Okay, so at the big bank, which is a bigger bank now. So I actually was with that bank for over 20 years. Between multiple mergers and multiple companies, let's just say 22 years. Mm-hmm. So I did everything from running a teller window to opening accounts to managing multiple branches. And then before I left for 8 years, I loaned money to small businesses. So I was a loan consultant.
Right. So yeah. So that's why I said it. She wasn't just a little background in banking. Okay.
So a commercial banker in a world of male dominated.
Yes.
White male dominated.
Yes.
With a lot of businesses that just needed funding. And in that big world coming from a big bank, you don't have time to nurture each small business owner like you want to. Mm-hmm. You know, you have to kind of,
it's a very fast paced.
It's very fast paced. You got to get the loan in, close it, and you moving on to the next one. Mm-hmm. And I just had a difficult time doing that.
Well, you had a difficult time with it being so fast because of the relationship piece that you really wanted to nurture.
Absolutely, yes. Because I was a banker that wanted to know about you, your family, your kids, develop that rapport. Mm-hmm, mm-hmm. Then let's talk about how we're going to do this loan and get this loan for you. It just seemed to, as the bank got bigger, right, seemed to move away from that to me. Right. I wanted to keep that. I wanted to be that person for the business owner that knows all the interworkings, because it's not just about your business. Mm-hmm. It's about your personal financials too. Because if you messed up personally, it ain't gonna flow right to the business. So it's gonna be an adverse effect.
Speaking of people's backgrounds and getting to know them and know all about their families, let's go way back. And let's talk about your background. Like, let's start from kind of like little Glenda to middle Glenda to how you got to the bank, Glenda.
She said from little Glenda to middle Glenda.
You saw how that bars. Just I want to go on the record that I got bars. Okay.
Oh goodness. Okay, little Glenda. Little Glenda was born and raised in Brooklyn, New York. Mm-hmm. I'm a product of public school, HBCU, private colleges that are probably now being sued. You name it, that's Glenda. So grew up, born and raised in Brooklyn. Go Brooklyn, go Brooklyn. So born and raised in Brooklyn, New York.
Wait. Yeah. We gotta. Okay, sorry.
We gotta get
Brooklyn
there.
Is proper.
Okay.
Go ahead.
Born and raised in Brooklyn, New York. Come from a huge family of people that have done a little bit of everything. Went to elementary, middle school, high school in Brooklyn.
All in Brooklyn.
Graduated high school, went away to college, to Virginia State University. Go Trojans. And I didn't graduate, actually.
So talk about how, because sometimes people think that the path is linear. So I did all the right things. I went to college. I graduated, got that job, and it was off to the races.
Listen, y'all, the path is what you make of it. My path was not what I originally thought. I was going to school to be a lawyer. I love to talk. I love to debate. I was like, okay, I'm going to be this huge corporate attorney and make all this money, have my own firm. But life happens. Shit happens. Excuse my expression. It just happens. So while I was in school, I call it grony macaroni. I was a grony macaroni, and I got pregnant. Life happens. I became a single mom, and I came back home, had to get a job. I worked for the Transit Authority, New York City Transit Authority.
MTA all the way.
MTA, that's some benefits, that pension, it's all of that.
And to be honest, we grew up in a time where that was what people told you. Take all of those civil servants exams.
Yep.
Take all the tests, whichever one you want to get you a good job with benefits and just chill out in that space.
In New York, that was the way to go. You got a city job.
Yeah.
I got the city
and
job.
You made it. If you got a city job, you made it.
Yes, you did. You
were
made
good
it.
to go for the remainder of your
You were respected and everything. Yeah. So I got the city job. And then the city job just didn't feel, I knew that wasn't for me. I knew that this is just not for me. I was actually a traffic checker. I used to count the number of people coming on and off the bus, on and off the train, so they could decide whether it was going to add a route or cut a route.
Gotcha.
I ain't no traffic checker kind of chick. Let's be clear.
but that did help you with the banking, right?
Well, so I pivoted. I said, this is not what I want to do. I did hair.
Yeah.
After that, I worked in a barbershop, had a chair, paid a booth rent, all that stuff. And then I was exposed to a banking program where they trained people to start it as a bank teller. And so back then in the early 90s, if you were a bank teller, that was respected. Whatever you did in the bank, you were respected. Right. So I enrolled in this program.
Were you scared?
Or were you excited? I was excited because I was like, okay, this is more me. This is what my stature is. Even though I did not finish school to become an attorney, I said, this is a professional job. I wanted to be a professional. I wanted to have a career being a professional, quote unquote. So I took this program and I started out at Chemical Bank in New York. I worked in Bay Ridge and Bensonhurst, of all places. Very Italian area, Jewish area. I didn't work in any of the urban neighborhoods. And that started my banking career. I started as a part-time teller. 6 months later, I was promoted to full-time. 6 months after that, I was promoted to the floor, the customer service desk. And then I decided to move to Atlanta. 97, the year after the Olympics.
What brought you to Atlanta? Was it the Olympics or was it something else?
It was not the Olympics, but the Olympics made it more desirable because I knew I wanted to leave New York. I did not want to raise my daughter. The next generation always wants to make it better for the previous generation, so forth. So I knew I didn't want to raise her in the neighborhood I grew up in. Now that neighborhood, them houses are worth $5 million, say. I know I didn't want to raise her there. So I said, where can I move to? Well, my sister-in-law at the time lived here. And I just heard nothing but great things about Atlanta. Now I'm a party girl. I'm a working girl. I'm a single mom. I'm young. I still need a career girl. Whatever. Working girl. Okay, let's scratch that. Not a working girl. A career girl. Not working girl, y'all.
Not that there's anything wrong with that. We just want to be clear.
So you got to put food on the table.
What her career
you got to put
was.
food on the table. You got to put food on the table. But no, I was a career girl.
Yes.
And I aspire for more. So I wanted to move somewhere where I still would have a life. So Atlanta was like that next best upcoming thing for everybody.
What year was that?
I moved here in 97.
Oh. That was literally right after Olympics.
Literally the year. She worked at the Olympics. She would call me and tell me about it. I was getting things together. At that time, back in the day, if you worked for a bank, regardless of what your position was, you got stock options. You got, all these different things. So I sold my stock from Chemical Bank. That merged with Chase. And I was able to pay my rent up for a year, pay my daughter's daycare for 6 months. I did pretty well for a young girl from Bed-Stuy.
For a working girl.
For a working girl. So
Right.
let me kind of speed it up a little bit. So I decided to come to Atlanta. Now back then in '97, man, you would have 5 or 6 job offers in like no time. So banking background, easy to go to any other bank. I've almost worked for every big bank here in Atlanta. Let's just put it that way. At the time, I still didn't see it as a career until I got to a particular bank where they had an assistant manager training program. I was recommended for that, got into it, and I didn't have my degree yet. Mind you, I still did not go back to school to get my degree. That came, but not at that time.
So now I will say that things are different, right, today, because one of the things that we do talk about with young folks and people in general is that you don't have to go to college, right? Now, that path of not having to go to college has changed drastically from when you were growing in your career. What would you say the difference was? Obviously, in this case, you were able to work and look for certain programs. So would you say that is a wise way for some people to go about doing it, where you try to find businesses or jobs where they're willing to invest in you in some way, that you don't have to take on the whole idea of I gotta go get my degree first and finish everything first and then
Yeah, hard work still pays off, guys.
Yeah.
I'm a firm believer in that. Yes, the degree shows that you are able to complete a program. I think it builds some character and it allows for critical thinking. However, nothing trumps hard work. And I got promoted and promoted and promoted up to a certain point where I felt it was a glass ceiling without my degree.
Right.
Now I went back and I got a bachelor's degree, I got a master's degree. And when I really think about it, for the organizations that I was with in banking, it really didn't matter once you're in the organization. When you're new looking to come into a new industry, sometimes that can be a barrier. Because they'll put on a job description, oh, you must have a college degree. Hey, you don't need no college degree for this. You know the work.
Right.
So if I didn't do it, would I be where I am today? I would say yes. But it helped.
Right. And I think too, what you just said is also really insightful, because college just costs so much now, right? So
I got student loans. I have student loans in the 6 figures. Let's be clear.
Yeah. So if you go in and you don't know what you really want to do, it may be in your benefit to be willing to do the hard work piece.
Yes.
Just to get your kind of bearings on
Take those entry level jobs.
Yeah.
You're not gonna wake up and be CEO or VP and have a title, executive title, just by getting in. You have to take the entry level jobs. One thing I did is I learned every position. I was a manager and I was running that teller line. If I needed to run that teller line to help get my clients up out that bank, I pulled the box and ran that teller line. Be willing to just do the work. Nothing trumps hard work. I don't care if you have a doctorate, you got $100 million in the bank. If you're lazy and you don't understand people and you don't understand hard work, you're not gonna get anywhere.
Right. And I think that is really, really important point that you just made about just the whole idea of the work is important. Yes, even if you have a degree, the work is still important.
Well, what I found is when I was in the hiring, because of course I've hired people, I fired people. I cried when I fired people. I cried literally when I first fired someone. Oh my God, I cried.
I don't want or like the idea of hiring people because I don't want to.
But once you get one underneath your belt, you're like, okay, I can do this. But I literally, I cried, and my manager, after she left and everything, my manager came in, but. Yeah. And there's some different reasons, but it's just so difficult telling somebody now you have no livelihood, you have no way to pay your bills, even though it might be warranted. I just felt, had I known about a situation, I could have did more to try to save her. So
and sometimes you feel that connection to the person because again, to the relationship piece, you're like, I hired you because I liked you and I thought you were, so you feel bad about it. But with that being said, you're saying like with knowing and seeing people's resumes, hiring them, and their backgrounds.
Yeah. So I would interview, college graduates and stuff. And yeah, you look good on paper, but where's the practical experience? Where's being able to hold a discussion? Where's being able to tell me about what you do well? How can you interact with people? Right. Because banking in my career, finances is a people business. Your business is a people business. Sometimes if I don't connect with a client, it's just not going to work.
Right.
You know that client in your head that you're communicating with. You're like, okay, I'm doing everything I can to build this, and they just going left, all money and good money. It might not work.
Right.
And so when you're interviewing and you're working with college graduates and people with limited experience, they just don't have it there, and they have to build it.
So I think really and truly something that is missing today, and I feel like it's a product of COVID as well, is the relationship piece. The customer service seems to be lacking and slacking. It's like we had this disconnect happening because of COVID, and I don't know if we've recovered. What do you think about that?
I blame a couple of things. COVID is one. Social media is two. I think social media is a big part of it. It takes away the personal interaction. Technology as a whole. I'm not just going to blame social media. Hey, Facebook.
Right. Not y'all.
I'm not going to, because I love Facebook and I love social media. So I'm not going to blame. I'm just going to say technology as a whole. And it has made us become disconnected and I think you've posted something, and I'm going to bring it up. You posted something a while back about when you pick up the phone or somebody texting you. All people want to do is text. Right. Let's pick up the phone. Let's have a discussion. Because after I got to text you or email you 2 or 3 times, there's no clarity there. Yeah. You're missing something in my text. You're missing something in my email. Pick up the damn phone. Right. And people still don't get it. They want to do business and communicate by text. Now, granted, I'm going to communicate my preferred way of my client. You know, if I know texting is better for you. But after we done exchange 2-3 times, I think I need to pick up the phone and call you and say, hey, let's talk about this.
Yeah. And a big piece of that is the person also being receptive to the relationship. Correct. So going back to what it is that relationship
Management Solutions, Inc., RMSI.
Right. That is such a big piece of what you're doing and how you want to do your business. You know what I mean? So as you said, my business and your business, but all business is relationship based.
It is.
Whatever that relationship looks like can vary depending on who the person is that you're trying to connect with, but the business itself is all relationship based. How have you been able to overcome the trying to get connectivity with the client?
So actually, some of my clients I never meet until it's a loan closing for local. So I can lend in all 50 states. So I have access to lenders in all states. In all states.
All the states.
I'm very connected to the South because this is where I am, and I'm a people person. So my husband actually gets on me with this because whenever I get a client that I don't have a dollar amount need on it, but if they have a brick and mortar business or an office, I offer to come out and meet them, whether we're closing a deal or not. And my husband's like, you're meeting with them and you don't even know if you're going to get business from them yet. That's not my concern right now. I want to come out. I want to meet you. I want to see how you run your business. I want to see the culture in your office. I want to see all of that because that's going to help my job be easier when I'm trying to go to bat for you with a lender. So that's how I, look to develop the relationship. Now, if they don't have an office, I offer to meet them at a coffee shop, lunch, breakfast, whatever that looks like. But 95% of the time, I offer a meeting to that person. And that's what I do. And usually they're shocked. I had one business owner tell me, you're going to come out to our business? Right. I'm like, yeah. She's like, our banker has never even done that. I was like, you need a new banker. And I'm going to help you get that.
Right, I was going to say.
Yeah, I'm going to help you get that. Because not only am I building a relationship, I'm helping bridge that relationship between the business and the banker. Because when I get a client and I place them with a bank, I'm looking at not just getting them funding for their business, but I'm getting them with a banker that's going to help grow with them. As their lending needs and their business needs change, they can be with that banker. So it's helping them bridge that relationship between business and bank.
Now, perfect, because this is where we go with your role between the business and the bank. And what is it that you bring to first the business and how you can help them be able to formulate a plan and a strategy to help bridge the relationship. Let's talk about what you do with the business first.
Sure. So my business is structured in 2 ways. So the first way is I have a business owner that they know they need funding. They don't know what to say, do, how to talk to the bank. I am that person. I'm that liaison. between the banker and the business.
The translator.
The translator, the storyteller, the advocate. Before I was on the bank side, I was advocating for the bank. And I always used to say, if this bank had a damn fly on the wall, I would be in trouble for what I be telling these clients. Like literally, I said, if they like recorded me talking to some clients, they'd be like, get your ass up out of here because you telling them too much.
Yeah.
So I advocate for the client.
So in some ways, you're helping to pull the curtain back.
I'm helping to pull that curtain back.
And you did it in the capacity that you were at the bank, but now you have a different role where you can pull it back, and that's your value proposition to a business.
So my value proposition is getting the client not only financing, but allowing them to navigate through that process easily, because it's intimidating. It's intimidating to a lot of business owners. And again, they don't know what to say, do, or even where to start. They just know they need funding for their business. Right. I'm here to alleviate all of that pressure, all of that stress, all of that anxiety with dealing with it.
And it's overwhelming for the average small business. To your point about brick and mortar, it's like, okay, you have a brick and mortar. Maybe it's just you and your spouse. Maybe it's you and your child. Maybe it's just you. And the idea of knowing that, yes, I definitely need to expand, or I'm ready to expand, but I know I need money to do so.
Yeah,
How do I get started?
Yeah, so all small business owners know is that they know their craft. So if they're a landscaper, they know how to landscape. If they're a digital architect, they know how to do that. And they know they need money. They know they need money to sustain or grow. Right. And I'm here to kind of help them through that process.
Right. And a little bit of what you also mentioned is that you are creating a story for them. You're advocating on behalf of them and creating that funnel from them to the bank.
Correct. And advocacy is huge because I've seen it in certain loan applicants where they got higher rates. They were required to put more down. And nobody wouldn't really know about that. On the commercial side, there's no regulations. There's no Reg E, there's no Reg this, there's no Reg that. There's none of that regulation.
There's not very much regulation in commercial real estate either.
Yeah, and so again, on the commercial side as a whole.
Right, yeah.
On the residential and personal side, there's all kind of regs. So it is being tracked of what applicants are getting what rates and what, in this. But on the commercial side, you can talk to a commercial banker. They can ask you 2 questions and decline you. Gotcha. So I'm here to I've seen it all, so I'm here to advocate for the client, get them the best deal, which I still struggle with, and I'll share that a little bit later. But
so let's talk about that, not that piece, because I want to go back to the other piece that we want to bring it back to in regards to the bank, but the application you just mentioned. So are you also kind of, I guess, looking over their application and auditing their application before it gets to the bank?
Well, yeah, I take a look at it. Now, the application is really just demographic information about your business, what you do, website, personal information, tax ID, annual revenues. What I really focus on is their financials, which is another barrier of entry with commercial funding. Business owners don't have up-to-date financials. I've seen it for businesses that range in $150,000 in annual revenues to $10 million in annual revenues. It is no one particular revenue size business that I don't see a struggle with getting financial documents. And that's the second part of my business.
Put my head down.
It just is, again, business owners know their craft.
Yeah.
They don't know the accounting side. They don't know the back office side. But then they don't know to ask for help. There's help out there for things like that. So the other part of my business is if I get a client in and I say, send me your financials, because I'm able to do some pre-underwriting, y'all. I had to underwrite deals before I sent it to the PIN. The PIN is the one that actually approved it. So I had to do a cash flow analysis. I had to do things like that. So once I get their financials and I do a quick and dirty, I'm like, you're not going to cash flow.
Give them a quick and dirty. What is it? Working girl. That's working girl talk. What's a quick and dirty,
so
girl?
Quick and dirty is basically looking at their what's called debt service coverage. It's similar to debt to income. So I'm calculating on the commercial side their debt to income, but it's called debt service coverage. That's all I'm doing. Okay. And so once I kind of do that quick and dirty, and I see that they don't qualify on paper, my goal next is to put them on retainer and work with them through this process with their accountant and CPA and sometimes even attorney to try to turn that into a higher, net profit, or higher debt service coverage to service the debt.
And create a cleaner profile for them.
A cleaner profile, create a plan. Because when most business owners go to a bank and they're declined, they don't know why they're declined.
Right.
It's one of two things. It's credit or it's cash flow.
So let's talk about credit. How much does their personal inventory play a part in their professional inventory?
I love this question. So listen, guys, scrape everything you hear and you see on TikTok, Instagram, and Facebook with these financial gurus that don't have 26 years plus of banking history.
How many?
26 years plus.
You hear that? 26? Go ahead.
An MBA in business. Your personal credit matters.
Say it again.
Your personal credit matters and probably is more important than your business credit.
One more again.
Your personal credit matters and is even more important than your business credit. I don't care about a DUNS number. I don't care about a net 30, a net 60. It doesn't matter. Okay? So your personal credit really, so let's kind of talk about that. Why is it so important? You are running the business. You are paying the business bills. You're paying employees, yourself. You are running the business. So let's just think about that logically, whether you agree with me or not. Logically, if you are running the business and your credit is challenged and you have a history of not paying your bills on time, how do you think that flows into what the bank is going to think about you from a business perspective?
Right.
If you can't manage your personal funds, how are you going to manage your business funds?
Sure.
Again, it's not always a direct correlation, but it's more times than none, okay? So to agree to disagree, the bank is looking at your personal credit.
Right. And it is your overall profile.
It is.
A lot of people think there's some separation that's happening here.
There's no separation in business and personal other than the EIN and social. That is your separation. From a legal standpoint, you are separated. So if you're structured properly,
and
from a tax,
they want their money.
So from a legal and tax perspective, if you're structured properly now, because there's a whole bunch of other stuff, just go do this, do that, and you're protected. No, not true.
Yeah.
So you're protected in that aspect, but you are the person that's the business. You are the business. If you got sick, is your business still going to make money? If you got sick and stopped paying your personal bills, you're going to stop paying them business bills, and the business is not generating revenue. So it's all intertwined and connected.
Especially for small businesses.
Especially for we call it closely held businesses. It's a closely held business. You are the business. It's not like your business is, you have a board where you don't make those decisions and your board makes the decisions. That's two totally different things. Right. Those are your public companies. I hear, well, I'm sure Walmart and Home Depot don't have to guarantee nothing. You're daggone right they don't. They have a structure set up. Yes. They have different structures set up. Right. So as a small business owner, you're always going to have to personally guarantee a request for traditional financing. There's untraditional ways that I'm not a big fan of, but they exist. And you don't have to personally guarantee, but you're giving your blood, your son, your daughter, your dog, your cat, and you're giving up so much.
Right. So we just talked a bit about what your value proposition and what it is that you provide to the small businesses. We understand your connection to bringing them to the banks. What is it that you're able to provide to the banks that they either don't know that they didn't know that they needed? Because again, sometimes, like when we talk about DEI, and it's kind of like, yeah, we're fine in that arena, and then you talk to the employees, they're like, no, we're not fine.
Yeah.
So what you provide, how do you provide that to the bank, and what exactly is it that you feel that you're providing to the bank?
Well, let me say this: my ultimate goal is not what I provide to the bank. Okay. However, I'm providing the bank clients. I'm providing the bank more checks. Checking accounts, more loans. They get paid on those things. And so I'm very strategic about what banks I place clients with. I have been in this industry for so long. I have banking counterparts at multiple different banks, from a small little bank where they have to go to loan committee every Tuesday for the committee to vote on a loan, to the big banks where you just go through the system and it's all an algorithm. And based on the clients, what their needs are, what their growth plans are, is who I decide to partner that bank with. And sometimes ease of transaction. You know, if it's a simple transaction, look, Glenda, I need $100,000. This is what I do. I still like to see where they are, because if you're a negative cash flow, I'm like, let's talk about how this is going to help you. I have to sleep at night. Right. So my ultimate goal is not what I'm bringing to bank, is what banks I'm bringing to the client. Right. The banks end up benefiting of having new clients, because some of these are my friends and they have goals. So I help them meet their goals.
Right. And one of the things you mentioned earlier was the additional products that the bank is now going to be able to provide to these clients, and it opens up another relationship.
Yep.
With the bank and that business, but not just from a business perspective. They also may be fulfilling a personal.
Absolutely. So business owners are ones that can buy every product at the bank, because there's business products and then there's personal products. And a good banker or a good bank is going to look at you personally, again, because they're looking at you, your personal credit. A good bank is going to identify some things in there. Well, hey, I see that you have this car loan. What is your interest rate? You know, oh, I'm paying 15%. What? I can refinance you. So it's all intertwined, and a good bank or banker is going to help. You know, even if they're just asking the questions, you might be good. You might be savvy. You might be interest rate sensitive. You might have the best things, but a good banker is going to inquire about that to make sure that they can put you in a better position.
Right. Now, you mentioned a car. People are buying cars in their business names.
Okay. Okay.
Let's get the small business lender guru's perspective on that. Not necessarily even like do it or don't do it, but I guess my question more so is about their portfolio of things that they have on their business credit, the things that they're purchasing with their business credit, how that looks, how that impacts their overall, not profitability, but you know,
their profile.
You know what I mean?
Yeah.
So if you're saying you bought 4 cars on your business profile, but nothing about your business
just
requires cars.
Why? Are they on Turo? Okay, yes, I can agree with that. Do you just want to just have just a deduction or just write off some miles? Like, make it make sense, people. You have to make it make sense. Just like you have a personal credit profile, where lenders want to see maybe 2 or 3 revolving accounts. They want to see an installment loan. Now, if you are putting everything in the business name, right? And then the banker says, well, what are your annual revenues? And you say, okay, I made $75,000 a year, but you got debt of over $500,000 from all these cars that you're trying to buy. It just does not make sense.
And then also, how is it potentially impacting your buying power?
And it can limit, because a bank can say you have too much business credit. Because what they're going to do is, I mentioned that debt service coverage, or DSC, similar to a debt income ratio, they're going to factor all that business debt into your calculations. So on your business Experian or business Equifax credit report, because they are there, they're going to look at the payments. They're going to, not just duns. The bank is going to see what those payments are. They're going to add them up, and they're going to calculate it based off of what you're saying your revenues are and what you can prove your revenues are. And it may actually put you out of the line for something you really need, versus putting all these cars and frivolous things on your business credit.
So that's bringing those 2 things together. And again, I think your role is very important, because you're not just operating. And I think when you were a banker, you still operated from best case practices perspective. Like, is this really what you need for your business?
Yes.
But in this relationship role, you can really have the conversation and say, is this really what you need for your business? And this may impact your buying power in the future. So with that being said, we're going to talk about your best case practices that you would recommend to small businesses, but I also want you to talk about the 3 top things that people should not do when they know that they're going to need to start working on it, because it's not an overnight process. You don't normally fill out an application and 30 days later you got business credit. What are the top 3 things that you would tell people not to do when they know that building business credit is what they want to do next?
So I would say don't max out your credit cards. That's the top thing. Don't max out your personal credit cards. And I get it, y'all. I get it as a business owner. When you don't know where to go get business funding, you go to your personal stuff first. I get it. It's just the natural thing to do. Oh, I have this credit card that has a $25,000 limit. I'm going to use this till I figure it out. Don't do it. Don't do it. Okay? Because that will actually had a recent client that had a lot of personal debt. Business looks good on paper. All that personal credit score was actually good as well. Her revolving debt was pretty high. So now your revolving debt is maxed out, but then you're asking the bank for a line of credit, which is a revolving product. It's not going to happen. So don't max out your credit cards. Don't do any payday or merchant service type of loans. And those are loans where
I'm about to say, tell folks what it is.
Those are loans where, and they get creative with how they market these things now, where you're making daily payments out of your account. It's typically daily or weekly payments. They're gonna give you they'll say fast approval within 24 hours, no credit score requirements, and no personal guarantees. So I would say stay away from those. And the third thing I would say is try to have some kind of reserve. And I know that's hard as a business owner because every dollar in, you're saying to yourself, a dollar's going out. But you got to pay yourself first. And when I say pay yourself, yeah, you should be paying yourself personally because you're doing a job. But pay your business. Have some type of reserve. And sometimes that can be the key to moving a marginal deal over to an approval if the business has some type of cash reserve. Yeah.
You have some money.
Yeah.
You're not on zero and asking me for,
because sometimes when you're on zero, you can have one hiccup in your business. And we all know every business goes through seasonality. You go through ups and downs. And the bank or banker has to be able to know that if you do have that one hiccup, you have a way out of it. You can crawl out of it. You ain't gonna run out of it, but you can crawl out of it. Right. So to recap, don't max out any personal credit cards. Don't take any merchant payday loans because they have no minimum time in business. You can be in business 6 months and they will solicit you for $50,000 and it all looks good. And they're like, oh, it's only $200 a day out of your account. $200 a day is what? $1,400 a week times 4, $5,600 a month. And that's not even, and it's compounded. Right. It is not simple interest like car loan. It's compounded, so you're never gonna get out of it.
Right.
And 3, try to have some kind of reserve. So for every dollar you make, maybe put up 5 cents. And I'm making that simple, just for simple purpose. So every dollar you make, maybe put up 5 cents.
And that takes us into the top 3 things that you would say before you get going on applying for business credit of any sort. What's the top 3 things that you should have in order? And if you don't have it in order, you should be working on getting it in order.
Personal credit. So get your
say that again.
Personal credit. Let me say it again.
One more time.
Personal credit. So get your personal credit together, people. I mean, please. I want you to be able to stick your chest out and walk into that bank and say, look, I'm here to apply for this line of credit. You can't do that with shoddy credit. So manage your personal credit well. If you don't know how to do that, use resources. I mean, you all want to be on social media using that resource. Use your resources. Use the internet. There are organizations out there, nonprofit organizations out there that will help you get that stuff together. And then there's people that repair credit. I have a mixed feeling about them. I have a couple of friends that do it and they do it well. It's no quick overnight thing. And then you have the quick overnight people that will get stuff deleted off, but it'll pop back on there in 60 to 90 days.
Do not get a CPN number. So.
And that's CPN number. That's a whole other thing too. Don't do it.
We'll do a show on that some other day. But
so yeah, get your personal credit together. Okay. The second thing I would say is get some type of invoice or accounting system.
And that would be your QuickBooks, your Intuit,
Intuit, Wave. I mean, there's some up there that's free, that's very basic, but sometimes it's all you need to get you started. You know, as your business starts to generate revenue and getting more revenue in, you always can upgrade those type of tools. And hopefully later you're upgrading to a CPA. not just a tax person, because a tax person is just there to prepare your taxes. A CPA is help you to have tax strategy. And so to help you write things off where the bank may add it back or you may get some type of credit for it.
Right.
So don't think paying for a CPA is just money down the drain. They're there to help you strategize to get your business to the next level.
Perfect. Well, it is time.
It's time already.
It's time already.
Listen, y'all, you know I can talk about this stuff all day long. So
we love it. We love people who love what they do. And we want to thank Glenda Walker from RMSI for joining us on Slay Your Day with April Rogerson, the Contract Slayer. And is there anything else that you would like to say in closing? How to get in contact with you?
Yes.
What your information, your social media information, all that good stuff.
Oh, Lord. So you can reach me at 470-485-4009. I am not as social media on the business side savvy as Mrs. Rogerson over here, the Contract Slayer. But my social media is RMSI Funding.
Go follow her right now. Go follow her right now.
RMSI Funding, Relationship and Solutions. My website is www.rmsifunding.com. And then for my consulting and coaching business is www.relationshipmsolutions.com.
And you want to jump on her website and book your consulting Zoom or 30-minute today. Maybe she'll give you
today. Yes. So I would just say, I just want to leave everybody with, when you are approaching your business and growing your business, look at it how you're approaching to buy a house. You know, people, when you know you want to buy that house, you're getting everything in line. You're really working hard. You're putting money, you know, for the most part. Treat your business that way. And I try to relate things to people that people can identify with. Treat your business the same way. If you know you're going to be seeking business funding or business loan, and you know your financials are shoddy at all best, put yourself on a plan to get that together, just like you do on a personal side when you're trying to buy that house.
And they do. And it's an interesting, I think it's great that you ended it that way and tied in the two, because we do get phone calls from people saying, I want to buy a house, and then you start talking to them about their personal economy, and they're like, oh yeah, no, I don't have any of those things. So that is definitely a perfect ending to this episode, and we thank you for watching. Say bye.
Bye.